Hello and welcome to the video. Today I'll be talking about 4 stocks that I'm buying right now. Let's get right into it. The first stock I want to talk about today is Apple, ticker symbol AAPL. Apple is currently down 15.3% from its all-time high. Apple is one of my largest holdings and I'll be adding more shares on this weakness. Not only is Apple one of the greatest stocks to own, they also pay out a dividend of 0.65%. which is 82 cents a share currently. I cannot stress how good the current price on Apple is, and although this is a well-known company, I feel like many YouTubers aren't showing this one enough love, so I wanted to mention it. In the last quarter alone, Apple had a revenue of $111.44 billion. Apple's annual revenue for 2020 was $274.51 billion, a 5.51% increase from 2019. You guys all know what Apple offers, so I'll go over this quickly. Apple is both a software and hardware technology company that focuses on phones, watches, tablets, computers, and laptops, and the accessories to go along with their main products. Apple recently dropped their Intel processors and created their own in-house chip for their Mac. Apple promises major performance improvements and more power efficiency with these new chips, and most reviewers agree that this chip is a step up for their Macs. This is a major move and one of the main reasons I'm even more bullish on Apple as of recent. Apple also offered their own streaming service, Apple TV. Apple TV doesn't have as much content to offer as its competitors, but it is the go-to budget streaming service at only $4.99 a month. Apple Music is a different story. Apple Music is still the biggest competitor in the music streaming game, although Spotify seems to be catching up. Regardless, Apple Music will most likely be the number 1 or 2 most used music streaming services for years to come. Apple also recently released their Apple One subscription, combining 6 of their major services. For $30 a month or less, if you share with friends and family, you can get Apple Music, TV Plus, Arcade, iCloud, News Plus, and Fitness Plus. This is designed to be the one-stop subscription service meant to steal users from other platforms like Netflix, Peloton, and Spotify. I think this is a great idea and will make more people more inclined to use Apple services. Another major service Apple recently added is their Apple Card that gives you daily cash back and flexible payment methods. You can use this card along with any others you have through their service, Apple Pay. Apple Pay is extremely convenient and I personally use this feature frequently. The next stock I'm buying now is Opendoor, ticker symbol OPEN or Open. This stock is currently down 22% from all-time highs. For the first 9 months of 2020, Opendoor generated $2.3 billion in revenue. This was down from $3.5 billion during the same period in 2019, but for obvious reasons. Because of this, I see Opendoor's revenue increasing exponentially once people start moving around again and the housing market returns to normal. I have a 1-year price target of $90 on this stock, representing about a 200% price increase. I think this company will continue to outperform Zillow, Redfin, and other competitors revenue-wise, and stay a step ahead of them with their services they offer. Opendoor is a platform that allows you to sell, buy, and finance houses through their website or mobile application. On the seller side of the business, they allow you to sell your house through a few simple steps. They also offer you a free preliminary offer in just minutes. So through Opendoor, you can either sell directly to them or list your property through them. If you sell directly to Opendoor, you will get an instant offer, then be paid out in a few days. On top of that, you choose what close day you want, and they even handle repairs if needed. Now, if you list through Opendoor, you pay only 5% in fees and get a $10,000 interest-free advance for renovations. Make sure to go check out their website and look through their user testimonials. Also, ask around to see if anyone you know has used their platform and how they felt about the process. Now, on the buyer side of the business, it's pretty simple. You search through homes in the area you're interested in and you find a house you want to buy. You can buy it directly through the app or website. With Opendoor, you automatically get 1.5% in savings, along with self-tours through their app, help from experts, and on-demand property reports. You can also streamline the buying process directly through Opendoor by financing or even refinancing your home. Here you can see the fixed rates that they offer, so everything is nice and transparent. On top of that, you'll save money on fees, and you can even move in with as little as 3% down. This is one of the heavier companies in my portfolio right now, and as you can see by my high price target, I have a lot of confidence in this play. The next stock I've been buying lately is Chargepoint, ticker symbol SBE. SBE represents Switchback Energy Acquisition Corp., the blank check company that Chargepoint has merged with. On March 1st, SBE will be renamed CHPT and trade under Chargepoint Holdings Inc. The stock is currently trading at $31, down 33% from all-time highs. In 2019, Chargepoint made $147 million in revenue, significantly more than its top competitors. As of 2020, Chargepoint has over 68,000 charging spots. In North America, they have a 73% market share, more than 7x its closest competitor, Blink Charging. My 6-month price target for this stock is $50. Chargepoint offers charging stations for businesses, fleets, and personal drivers, but they focus on the business and fleet side of things. I actually think this is a great move and that they should continue this focus. This method allows people to charge their vehicles while working or taking care of any other task, so they don't have to wait around for their vehicle to charge. Chargepoint strives to provide the smoothest possible experience for its users. With their app, you can see what charge stations are available to you and how close they are to you. They have thousands of charge stations in both North America and Europe. Chargepoint has delivered over 89 million charges to this date and are constantly looking to expand their reach. Chargepoint offers both AC and DC charging stations. They created their CT4000 all-purpose charging stations with businesses, property owners, and their employees, customers, and residents in mind. Their CPF50 charging stations were created for fleet depots and multifamily residences. Their DC fast charging stations include their Express 250 station, meant for quick turnaround charging, and their Express Plus station. The Express Plus charging station includes a modular, scalable architecture that allows up to 4 power blocks and sends up to 500 kilowatts to a single vehicle. The last stock I want to talk about today that I've been buying recently is DraftKings, ticker symbol DKNG. DraftKings is only 3.5% off its all-time highs. DraftKings just reported their Q4 earnings where they beat their revenue estimates, bringing in $322 million. This represents a 145.8% increase year over year. Average monthly unique payers jumped 44% versus last year to 1.5 million, and average revenue per monthly unique payer jumped 55% to $65. They also raised their full year 2020 revenue estimates to a range of $900 million to $1 billion, from previous estimates of $750 million to $850 million. So it's possible they break $1 billion in revenue as soon as next year. DraftKings is the official daily fantasy partner of the NFL and also allows you to join and run fantasy league contests for countless sports and leagues like the NBA, PGA, MLB, NHL, and MMA. DraftKings works differently than season-long fantasy by allowing you to enter short-term contests. With DraftKings, you can draft a new lineup whenever you want, play in a public contest along with private ones, enter last minute, and get paid out weekly. So before I end the video, I want to talk about the dip in the market affecting many of our tech stocks right now. I know a lot of people are worried about a potential market crash, but the best advice I can give is to ignore the noise, keep dollar cost averaging into great companies, and you'll have nothing to worry about. I want you guys to take a deep breath and just zoom out on the NASDAQ, Dow Jones, and S&P index. And remember, time in the market is always more important than timing the market. Also, if you guys trade options, make sure to buy them far out enough to weather the volatility. That's all for today. These are the 4 stocks I'm buying right now. I want to remind you guys I'm not a financial expert or professional, so please do your own due diligence. If you want free stocks, make sure to check out the links in the description. Comment below your favorite stocks from the list or any other stocks that you're planning to buy or you want me to talk about. I'll see you on the next video.